Next up is Mr. Roy Golez to present his insights on the residential market. Roy?
Thank you, Erica, and good morning, ladies and gentlemen. So a quick summary of the residential sector that we took a look at. Basically, what we did was take a look at the BSP loans, home loans specifically, year on year, and we compared it with our in-house tracking of, number one, the launches by developers on a quarterly basis, and number two, with our tracking of the pre-selling units, primarily in Metro Manila, but we'll also be talking about projects outside of Metro Manila. The market today, as evidenced by the BSP numbers, shown that it grew by about 10%. So what do we mean by it? Basically, the real estate loans related to residential units. And the 10% growth is nationwide. Now, however, while the home loans grew nationwide, the growth is mainly outside of Metro Manila. We have been seeing that start just prior pandemic, but it actually accelerated from 2020 onwards to today, and the gap has been widening. Most of the loans actually are already outside of Metro Manila versus those in Metro Manila. And based on our tracking of pre-selling, we have been seeing declines in both pre-selling numbers as well as developer launches. About 29% drop in terms of pre-sales of condominium units and a 38% drop in launches by developers from the previous quarter or from numbers of the fourth quarter 2023. Now, just a summary of our outlook, we really see the market to continue sustaining its growth because of the big demand for housing. We have a very young population. We call it the golden demographic with an average age of about 24 years old, with high employment, and these new families will continue on needing housing. And we also see the continuous or steady widening of the gap. Many of the new demand is actually outside of Metro Manila, only because also the infrastructure development has been or is already near completion in some places, notably in the Calabarzon area. And despite the declines in launches and sales, we know for a fact that most developers have projects ready for launch this year. We will not be able to present the numbers for these new launches, but we can say that they're quite substantial. And the two biggest issues today for housing is really the interest rates that have actually started impacting the market in 2021 to 2023, as well as the current geopolitical risks that are happening worldwide. Okay, the demand drivers for residential is quite strong, as has been last year, as it is today, and as Miko has mentioned earlier in his presentation, the OFW remittances grew by about 3% from last year, and according to our discussions with the BSP, about 50 to 60% of these remittances actually rebound to the residential market. In terms of growth in BPO, we saw a 10% growth from 2022 to 2023 to about 35.9 billion. In terms of the economy, employment rate is up by about 1.3% to 96.5% from the previous quarter. And what we are heartened to know and see is that the current administration of BBM is continuing with its infrastructure projects from the previous administration. And as was mentioned by Miko also earlier, what we saw as a low-lying fruit, the tourism industry grew by about 125% from 2022 to 2023 to about 482.5 billion in international tourism receipts. Okay. Where is the supply of condominiums located? Primarily in the bedroom communities of Quezon City and Ortigas, which are really the traditional bedroom communities of Metro Manila, and mostly in the pre-selling projects of about 48,400. If we take a look at our traditional take-up rate or absorption of about 3,000 units per month for Metro Manila, that is a healthy 1.16 months of supply of condominiums. However, what we did see in the first quarter of this year, only 4 projects were actually introduced to the market, or about 2,700 units. And when we were tracking the condominium launches in the past 15 months, most of the units introduced to the market were in the upscale segment with prices of about 7 million to 12 million. And the primary or the bigger market was taken by the bigger market share was taken by DMCI, followed by Mega World, and lastly by SMDC for the top 3 positions. Also to note, in the last quarter, we were saying that most of the introductions of units were actually in the high-end segment. So what we saw was developers starting to move downwards towards the upscale or the more popular market, also the bigger market in general. And so just to explain further, this is really the market performance today, and this is what we call the money slide. The orange lines denote the take-up of or pre-selling of the units, and the blue lines denote the launches by developers. Okay. It was quite a slow start for developers. Only 2,708 units were introduced in the market, or about 4 Metro Manila condominium projects. And for the take-up, we're now hitting about 6,900 units, or about 7,000 units sold per quarter, down from about 9,720 units. If we look at the graph, comparing it with interest rate increases, we actually saw a performance drop as the government started to increase the rates from 6 to 6.25 and then up to 6.5%. It is also during these periods where we saw developers start to clean up their inventory of buyers. During the pandemic, we saw a high attrition rate of buyers or backouts. And right now, because of the quality of the buyers that they've been having problems, the developers have been starting to introduce stricter buyer screening for their projects. Okay, so now this slide shows the movement of housing loans, primarily from 2017 and 2018, where Metro Manila was the top area for loans. We are seeing the widening gap in terms of location. So the blue line shows the areas outside of Metro Manila, and the orange lines show the loans taken inside Metro Manila. And the gray line is the total of loans taken on an annual basis. So these are numbers from the Bangko Sentral in terms of real estate loans. The market grew by 10% from 2022 to 2023, but most of the growth actually came from, or about 2/3 came from areas outside of Metro Manila already. And they were if you take a look at the bottom right of the screen, they were taken by those borrowers buying single detached units in the areas of Calabarzon primarily, followed by NCR and Central Luzon. We see that this behavior of the market will continue as more developers are introducing township projects. In a latter slide, we'll show you where these townships are and at what price levels these developments are already at. Okay, Okay, so this slide shows the projects south of Metro Manila, primarily the townships, the total units that has been introduced, and the remaining inventory. So on the top right of the slide, we see that in 2024, about 423 units already have been introduced in the first quarter of this year. That's quite a high number considering that last year, only about 648 units or residential units have been offered to the market, or about already 65% of last year's numbers. And in terms of sales, already 83% of total inventory introduced has been sold. And what always gets a lot of our clients and buyers are the pricing of these townships outside of Metro Manila. A rundown of the 10 townships that we studied. Vermosa is already at 60,000 per square meter, newly launched in 2024, and is already 63% sold. Quite a strong performance. Foresta of Vista Land is already 88% sold. It was introduced, I think, last year. And the price is already at 207,000 per square meter. Now, where is Foresta? It's really in the Daang Reina area, further south of Alabang, towards the Vista City area. So 207, it's almost like the pricing of Ayala Alabang, which is hitting 250,000 per square meter. In Carmona, we have Ciela at Era Heights, a joint venture between Ayala and the Hong Kong Land Group and the Kuwok Group. The current pricing is at 60,000 per square meter, and this is near the Carmona exit area. Now, number 4, we have Southmont. This is a project in Silang with the Cathay Land and Ayala Land JV, already at 45,000 and 51,000 pesos per square meter. Now, the price growths are all double-digit from last year. Very, very strong market. Just recently launched, or actually just introduced to the market but no launch yet, Heartwood by Federal Land at Meadow Crest in Binyan. So this is beside the LaSalle DLSU campus and the Beacon. At 45,000, and last I heard yesterday, they're already taken prior to launch. Nuvali, currently at about 63,000 per square meter. Now, if you look at Santa Elena, it's already hitting 75 to 80,000 per square meter. Rockwell South, they have launched a new phase, and they're pricing it at 68,000 to 70,000 per square meter, although the average of the phase 1 is about 60,000 per square meter, and so on and so forth. So Maple Grove in Cavite, 72,000 per square meter. Ardent Botanical, about 40 to 50,000 per square meter, and River Park, the latest project of Federal Land, also at about 53,000 per square meter. So you have to understand these projects are already in the provincial areas, or what we used to consider as provincial areas, but what can already be seen as part of Mega Manila. So when we start to consider the infrastructure projects moving down towards the south, towards Laguna, Batangas, and then towards Cavite, we are seeing the urban sprawl starting to leapfrog towards these areas. We'd like to note that the CALAX connecting SLEX to Cavitex soon to be completed. The proposed CBEX from CALAX towards Nasugbu area, towards Balayan, towards Bawan also, and then the TR4 towards the south. Okay. This might be the reason why there's some weakness in the condo market, where people start to deploy their investment funds into land where they see very healthy capital appreciation growth. It can also be noted that ever since the pandemic, health, more space, more nature has been a major concern for most buyers. And also, just to show that the market has already recovered, these prime villages have always been seen as the ideal store of value for wealth. Now, very scarce. There are only a few thousand of these lots in Metro Manila that has and will probably not increase anymore because of the scarcity. We're seeing Green Meadows and Alabang at 228,000 per square meter, but the Dasmariñas and Forbes area are already hitting about 600 to 630,000 per square meter. And in support of the luxury market, we also took a look at the pricing of condominiums in BGC and Makati. And we are seeing double-digit growth in some of these prime projects. In Makati, so Two Rojas Triangle grew by about 10%. The Proscenium, which is a Rockwell project, by about 17%. And this is compared to last year's prices. Another Proscenium project hitting 15%. And if you look at BGC, they're also at the high single-digit price increases. Okay. So overall, what we're seeing is that the luxury market and the high-end market has been very healthy. There has been declining condominium sales in the metro, but it has been compensated by increase in sales in areas outside of Metro Manila, specifically in the south, so towards the SLEX and the Cavitex areas, and a shift in product preference from condominiums to lower density, more sprawling township residential lots. And that about ends my residential deck.
Thank you very much, Roy. That was very insightful and exciting. Again, a quick recap of what Roy has shared. The trend of decentralization from vertical Metro Manila to outside horizontal townships continues. The road infrastructure plays a big role in this as we see prices south of Metro Manila mirror that growth. Naturally, vertical projects rather, in the capital region saw a decline this quarter, both in demand and project launches. Again, there are only 4 project launches in Metro Manila vertical condominiums so far this Q1. Capital values in Metro Manila condominiums, nonetheless, certain capital values rather, are growing double-digit numbers, particularly upscale and high-end condominiums. The prime villages are also mirroring that growth. Overall, residential real estate loans increased by 10% from 2023, signaling an overall growth in the residential sector. 60% of those real estate loans are Calabarzon and NCR. General or macroeconomic indicators are showing optimism.